Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning. Ira Epstein of Lynn & Associates with your morning flash update for this Thursday, the 20th of April, 2017, about 9:25 a.m. Central Daylight Time. All right, my friends, stock market getting a little bit of a reprieve, I think in part because gasoline and crude oil are up. Now, you get this crude oil under 50, get nervous in the stock indices. That's the way to look at it. The big build that we saw in gasoline probably had a lot to do in reading about it with foreign countries dumping gasoline here because the American market is strong, it can support it, but at lower prices, and that's what we think is going on. On the other hand, the refinery rate's at 92.3%, very scary. That's running practically full out, and they won't keep that up if they can't do anything but store gasoline. They don't want to store it, they want to sell it. So if they see continued builds in it, they'll pull back. That'll impact their purchases of crude. That's the way to look at it. In the grain market, everything seems to be underselling pressure. Nothing changed there. In the meat markets, if you're watching cattle, it's just a roar to the upside. In the metals this morning, we are still seeing silver under pressure. The gold market down a little bit. It's $4 off its low. Silver hasn't come that far off its low. Copper has no legs to it. It got to $251.90. Admittedly, 3 cents up from there, but that's only unchanged on the day, so it's probing new lows. Platinum and palladium prices both came alive today, recovering just about everything they lost yesterday, which was about $10 a piece. Palladium's up about $20 today. It was up quite a bit. Dollar still under selling pressure at the expense that's going on right now in the euro and the pound gaining on it. And in Japan, the bank there, I was just watching an interview with the bank governor, and he does not see any reason for the bank to stop its purchases of what it's doing. In other words, they're going to keep an easy money policy all the way through. That's hurting today, the yen. But with the elections coming up in Europe and nobody knows what's going to happen there over there on Sunday, what if they get a far right and far left candidate and one of the two are going to be your next leader of France? Neither would be the ideal situation. Market doesn't know what to do with that. Cotton still acting very good, and we're still in that little bit of a correction throng in the bonds and notes where we had so much money that, as you know, was putting on that risk-off idea, just running into those markets. Now they're coming back a little, and that's one of the reasons gold has gotten its legs under it, under that 1280 level, it appears at this point in time. As for the data today, the Conference Board's U.S. leading coincidence lagging indicators came in at up 0.4% expected versus 3. So a little bit better there, so nothing to worry about in those numbers. But the economic indicators slipped back to only 2% gain, and the lagging indicators went flat. I don't think this is the best report. Yeah, that first number looks good, but it's questionable. And then you get the Philly Fed Index, which shows a slip in consumer confidence all the way through it. 22 is the business activity. They expected 27. Prices paid 33.7. If you just look at all these numbers rather than me reading them off, the vast majority of them are lower, not higher, and that tells you that things are just doing this right there. When we look at the jobless claims, they were up 10,000 for the week. They expected 240. They got 244, but the overall number is still nice and down. Eurostat data release shows construction during February rose by nearly 6.9% month to month, and it was up 7.1% on an annual basis. They also noted that the Feb rise was the largest gain since March 2012. That's all good news, and that's easy money policy there. Energy analysts are looking for a 50 billion cubic foot injection. Now, for comparison, a week ago they saw 6 billion feet, and for the average period it's 35. So that warm weather is still weighing on the natural gas, and you see that almost in the prices here as we're back down into that 317 level. I want to talk to you about your free one-year subscription to Modern Trader magazine. Now, through Modern Trader, we're able to give you a free 1-year subscription. It's not the print edition of it, it's the email, and that's what we get in our office. And what we do with it is it's got a reader built in. It works perfectly, especially with today's new screens. They're just easy to read. This goes anywhere in the world, by the way. So all you need to do is give us a call. You can go to our website and sign up for it. As I said, it's a 1-year. This is the current May issue, what it looks like. These are the articles, and it does talk stocks, options, cycles, ETFs, the Forex market, obviously the futures, commitment of trading, the trading calendar, stories, this the chalk and oscillator. Then you get the other stories about patterns within patterns. But I mean, it just goes on, and that's the beauty of it. Great reading. And then to go with your subscription, you get a daily market focus from them via email. Chock full of stories impacting today's trading. Give us a call. Go to our website. You'll see the carousel of free offers. You can click right up here if you're watching me on YouTube. $79 value, totally free to you. You got nothing to lose. I'm Ira. Look forward to seeing you in the other videos later this afternoon.